Hi, this is Anthony with TradingETFs.com. Today's April 26, 2020, and we wanted to give an update on a few of the ETFs, the major markets, and then also a few other ETFs and a couple stocks as well. I want to first apologize if you hear any background noise. We'll do our best to try to keep the background noise down as much as possible. The first ETF we wanted to review was the Diamond ETF, the DIA, the Dow Jones Industrial Average ETF. And you can see here we highlighted a couple things. One is just reviewing what's happened since February. You can see here, obviously, we went from roughly 300 all the way down to about 180 or so. And then you've seen this bounce back up. And then in particular, over the last couple weeks here, we've gone nowhere, simply just gone sideways. But looking at our long-term oscillator, you can see here that we had a sell signal generated back on the 26th of February, and we got a decline, we got a counter rally back to the upside, tested the 200-day moving average, and then continued to just completely get crushed. Notice that when we crossed down below the zero line, giving us that sell signal, even though the price gave a counter trend rally back to the upside, the oscillator continued to lose momentum, and we did not get a move back to the upside in our oscillator during this period of time when we got that rally. And then you can see what happened. We just accelerated to the downside, gaining momentum. We got to the $180 price range, and you can see then our oscillator went sideways for a couple days and then started to move back to the upside with this rally here. If you notice here, even though we got a price correction, our oscillator really was not turning back to the downside. And then when the market rallied here, you can see our oscillator started moving back to the upside. Or, I'm sorry, it's a negative reading, but it's less negative. So in other words, it's gaining momentum simply because it's not as negative. And the interesting part is when we get to this Friday trading day last week, you can see the oscillator is right up against the zero line, and we're on the lookout for a buy signal crossing above the zero line. And normally what happens is when we get across above the zero line, we'll get some type of a counter trend correction. So our best guess is that we move to the upside here, crossing above the zero line, giving a buy signal, which means price will probably continue to move higher here Monday, Tuesday time frame, pulling up the oscillator above the zero line. And then my expectation would be is that we get some type of a small couple-day counter trend to the downside and then shoot right back up above the 200-day moving average. So that's our best assumption at this point. And you can see here over the last couple weeks, we've had a lot less volatility, short trading ranges between upside, downside. You see a lot of wicks here, meaning there's just a lot of indecision. They're just simply buying some time until they get some other trigger event. We have earnings coming out this next week from some of the large tech companies like Apple, Amazon. So that's what the market has pretty much been waiting for, going sideways. And our expectation is that we're going to move to the upside here. Our short-term oscillator, you can see when we go back in this time frame, go back to December, you can see how many times we went below the zero line and then move back above the zero line. You can see this between the red arrows and the green arrows, how much volatility there was just on the zero line. and we really didn't get anywhere until we got this last sell signal back on February 20th, where our short-term oscillator went down below the zero line and stayed pretty much this whole entire time up until March 24th. Then we got a cross above the zero line, and it has stayed above the zero line ever since. So just looking at from a pattern standpoint, back here, the market was extremely volatile in terms of daily price movement, where the oscillator wasn't really choosing one direction or the other above or below the zero line until we got to February 20th, and then we went below and stayed below. And then now, March 24th, we went above and stayed above. And that's pretty much where we've been this whole time. So all we're doing is working off overbought levels from this rally here from the 180 level. And we've just simply gone sideways to work off any overbought status. So again, that's what we're looking for, is we're looking for the zero line to be crossed above, giving us a buy signal. So that means that we should probably move above this range here, probably into the 259 range, somewhere between the let's just say 250 to 259 range, and then we will start testing this 200-day moving average and seeing if we can pop above it again. Keep in mind, we've got a big gap back at 288.51 roughly, so there is a lot of room here to the upside if we get a trigger event, most likely these earnings that are coming out next week. If we look at the SPY, you can see here this one is even higher on the zero, or excuse me, it's even it's sitting right on the zero line compared to the diamond contract is just a little bit below it. So the SPY is actually in a better position of crossing above. It's going to cross above on Monday. You can also see here we got a sell signal back on the 27th of February. We got a counter trend rally back above the 200-day moving average, couldn't hold it, and then we just collapsed. Similar to the diamond ETF, we got a move to the upside, pulled back. The oscillator didn't move to the downside. It just continued to increase. Here we've gone sideways, just like the diamond ETF, and we're waiting for the cross above the zero line. If we look at the QQQ ETF, you can see here we crossed back above the zero line back on April 16th. And again, the reason I highlighted the sell signal is normally you get a sell signal, you get a counter trend rally. Here in the QQQ, you'll notice that we didn't really get a counter trend rally back to the upside like we did here with the diamond ETF. We got this counter trend rally. We didn't get that with the QQQ. It continued to, once it gave a sell signal, it continued to still close below the previous day's price. And then we've got a cross above the zero line on April 16th, and we've gone sideways. But if you notice, our oscillators continue to increase to the upside. Our short-term oscillator has still been moving to the moving sideways, alleviating the overbought position. And now we're in a situation where we're going to have earnings coming out next week. Our expectation is that we're probably going to see a move up, probably to this 222 range. And then you also notice that we've got a gap here that we could potentially start filling just next week. And that'll set up a retest of the all-time high here. So despite all the negative news that is out there, and despite how bad the economy is in terms of not being opened as of this point, trading is another world. You have to look at what the chart is telling you, not what the news that's being reported is telling you. And so there's an awful lot of people that are on the wrong side of this market right now, and they're holding and holding and holding, expecting the market to turn to the downside. But everything that we're seeing is that it wants to continue to move to the upside. So you have to go with what you're seeing, not what you're hearing. And if we take a look at one of the other ETFs that we talked about previously back on March 9th, is we highlighted the XOP, which is the oil and gas exploration ETF. And we highlighted that our short-term oscillator was so oversold that it had never gotten to that oversold reading before. And we also were measuring the distance between price and the 200-day moving average, and you can see it was roughly 340 or so, 340%. So the one thing that occurred on this chart that's different from when we posted the video is that there was a reverse split. So price was roughly $8, and then it split 4 to 1, which is why you're seeing the chart at $32 here. And so we gave a video showing how extremely oversold price was, and you can see here we went sideways for quite a long period of time, and then into April 3rd, April 4th, we started to move out of this sideways channel and then started moving to the upside. You can see here that we broke above this previous high, which then means the next high that you can expect it would be a covering of this gap here. And so this is roughly $50 in price. We moved up, filled a little bit of the gap, and then it pulled back down, and then it got support, and then it started to move back up even higher, filling more of the gap. We still expect it to fully fill this gap, and then we've also got a gap to the downside here that could be filled between roughly 74 and 72. So you can also see the 200-day moving average is coming down. So you can see price is moving up towards this 200-day moving average. It's almost like the 200-day moving average becomes a magnet. The closer it gets, the more momentum that'll build to try to come up and touch that 200-day moving average. Notice that even though price had been moving to the downside in this channel here, right around March 31st, we started to see the oscillator gain momentum. Again, this is negative. This is a negative reading here, so that means it has less momentum to the downside. And as price starts moving higher, our oscillator becomes less negative, and then it gains momentum up to the point here where we're on the verge of crossing above the zero line. And the last time we crossed below it was back on January 24th, and you can see it just collapsed after going sideways here for just a short period of time, and then we can see the collapse. So now we're on the verge of crossing above the zero line. There is a lot of talk about a bailout for some of the oil and gas companies. So that may be what the market's expecting. But again, you got to go off of what you're seeing, not what you're hearing. And what I'm seeing here is that the oscillator is going to cross above the zero line, and that most likely will help price not only fill this gap here at 50, what did I say, roughly $50.84. It'll most likely continue up to about the $60 range before it decides whether it can continue to go higher or not. So that's what we're looking at this point. The next chart I wanted to take a look at is a stock. It's Union Pacific Corp, railroad stock. And the reason I say pay attention to what you're seeing, not what you're hearing, is that we know most industries have really taken a big cut in terms of revenue, and obviously railroads play a part in that as well. But if you notice here, we already crossed above the zero line. Our system gave us a buy signal, and going back to this sell signal back on February 26th, you can see we went down, we had that counter trend rally, and then we just completely collapsed into it. And then we bottomed here at roughly 105, and a couple days later our oscillator bottomed and started moving back to the upside in terms of less negative, up until the point where we get to where we now crossed above the zero line. And you can see price had consolidated sideways going from April 6th to April 22nd, and then Thursday we got a move to the upside. Next day, which is Friday, we got an inside bar just kind of sitting there right below the 200-day moving average, which is going to act like a magnet trying to pull price up to it. So again, if you go off of what you're hearing about how bad things are, but change your perception to what's actually occurring, you seeing momentum now going to start to accelerate to the upside, and you should see price follow right along with it. So there's definitely things going on underneath the market that are not consistent with the news, and so you want to position yourself based on what is, not what ifs. And so a lot of the what ifs right now are about how bad the economic numbers are going to get, but what is true right now is that we've got positive momentum building for Union Pacific Corp. And let's go through another example here. Let's go to Apple. Apple's going to be reporting here on April 30th. And so if you look at just recently, we got a buy signal when it crossed above the zero line, April 17th. We got that counter trend correction, and then we've got the last 3 days here move back to the upside. And you can see that even though we got this counter trend correction, our oscillator really didn't turn back down below the zero line. It just went sideways and then started moving up a little bit. It's not really gained a lot of momentum just yet, but it is positive momentum, and that's what it's important here. Is there's a trigger event coming, and in this case it's going to be Apple earnings, to where we can see Apple move to the upside, and we can probably see a price at least to about $300 right in here. This resistance here is where we're going to shoot for next. There's slight resistance here, but with earnings coming out, it's going to move much more than just just a couple dollars when it actually reports. May even move up in anticipation of a good report coming out. But this isn't going to provide too much resistance here. We're really looking at this next level of resistance, about $300. If we get above that, you can see this gap here at around 310 is where this gap occurred. So we can actually see Apple move up to that $310 price range to fill the gap, and then we've got a retest of the previous high. So it either sets up for a double top, or we're going to see a move to even higher highs, which would be a higher all-time high. So again, you got to go off of what you're seeing, not what you're hearing. And what we're seeing here is momentum is building to the upside for Apple. You can see the same situation with Amazon. Amazon back on March 31st actually gave a buy signal. And Amazon is definitely a much different chart than what you've seen on all the other charts we've gone over. We didn't get as big of a move to the downside. Just looking at the chart itself, percentage-wise, it's very similar to what Apple did, but again, that's not a large move to the downside. And then once we bottomed here, we moved up, went sideways, and then we just broke out to the upside. So we're already on an all-time high with Amazon, and then even from the all-time high, we've simply been going sideways, and the momentum continued to build throughout this whole period of time. So Amazon's going to report on April 30th as well, and you can see the Bollinger Band continues to move higher. So our expectation is that we're going to see Amazon hit another all-time high, probably in the $2,500 price range. So again, you have to go off of what you're seeing, not what you're hearing. And what we're seeing is setting up for a move to the upside, and there's not a lot of bullishness out there, in our opinion. What we're seeing is everyone comparing these markets to the 20s and 30s and the 2008, 2009, the 2000 market, but you have to go off of what you're seeing. And what I'm seeing is that momentum is building to the upside, and it's not only in the S&P 500, it's not only in the Diamond ETF, it's not only in the QQQ, but it's also in the ETF like XOP, it's also in Union Pacific Railroad, it's also in Apple, it's also in Amazon. And I'm not suggesting that those ETFs and stocks are the whole entire market, but you have to look at it from a standpoint of this is what is currently being shown on the charts, and so you have to trade along with it. So the only other thing we'll mention here is that we have created a Patreon account where we'll be posting trades and chart analysis that will not be posted immediately onto our website at TradingETFs.com. So if you'd like to join the Patreon account, you can go here to TradingETFs.com on Patreon, and you can go ahead and sign up. The other thing that we're going to be providing is we've had some questions about how to get access to our oscillator, and in our Patreon account, one of the options is to be able to get access to our oscillator, both of our oscillators, our short-term and then also our long-term oscillator on every chart that you use here at TradingView.com. So if you're interested in that, take a look on our website. You'll see a Patreon sign-up form down here on the bottom section. Give me just a second. Let me update this real quick. You can see it right here. You just click this button and go ahead and sign up for that. And I think that's about all we have for right now. And you can always send us a comment through the YouTube video. You can also comment down on our website. And now the other option is you can go to the Patreon account and we can communicate there as well. So I appreciate your time. Stay safe and enjoy the rest of the weekend. It's a little bit left today, and then we'll get ready to go back at it this week in the markets. Thanks a lot. Have a great day.